Get Rich Education is brought to you by Norada Real Estate, Corporate Direct, and Mid-South Home Buyers.
Garrett Sutton here, Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate and paper asset holdings with the right mix of LLCs and corporations. My firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention Get Rich Education for a free bonus. Switch your resident agent service to us and receive another bonus. It's all good. We look forward to assisting you at corporatedirect.com.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to GRE. This is episode 87. My name is Keith Weinhold, and I host this weekly show right here called Get Rich Education to help you build durable wealth for yourself. And we build it with a vehicle that has made more ordinary people wealthy than anything else, and that vehicle is real estate. But don't be intimidated by real estate, because we do it in a way where you have control of your real estate, yet not so much of the hassle associated with it, and where annual rates of return of under 25% are actually disappointing. Yes, I said that. Well, how would I know? Because I've been doing it myself since 2002. Get Rich Education is heard in 165 world nations, and we're proud to be one of the very few investing shows to be heard on iHeartRadio. And we've also got thousands of listeners on iTunes and other popular platforms like SoundCloud, Spreaker, a dedicated Android app, and a dedicated iPhone app for the show. And I'm just grateful that you're here however you're listening. We're going to build your wealth today. And you know, the other thing that makes passive real estate investing such a valuable proposition to you is that you don't need any formal education or degree or certification course or a well-connected uncle, okay? You don't need family connections to get in on it, all right? Today, we've got a guest where you're going to learn an inventive way that you can enhance your existing buy and hold real estate portfolio's cash flow through better occupancy and a better quality of tenant by using this specific creative technique that we're going to discuss today. And it's a technique that I've never thought of before, and I don't know if I ever would have thought of this. That's coming up in a few minutes for today's show. And we've had some really great shows here lately, if I do say so myself. 3 weeks ago, Robert Kiyosaki was here on the show. Last week, Rich Dad advisor Ken McElroy brought us tons of value. Next week, we've got a great guest with a fascinating topic, and that is the topic of how to predict real estate prices. Man, so interesting. The week after that, we're going to do a show focused on turnkey real estate in one particular geographic market, and this market has often been named as the most landlord-friendly state in the United States. And then the following week, which is 3 weeks from now, we've got such a special guest, and if you already know this guest's name, then you're going to be excited that he's coming to Get Rich Education. It is none other than Harry Dent. Harry's the author of the acclaimed book, The Demographic Cliff, and he makes these fantastic predictions. For example, Harry Dent says that the Dow Jones Industrial Average is set to tank and plummet all the way down to 6,000 points by early next year. Yes, that would be the Dow at about 1/3 of the level that it is at now by early next year. So I expect lots of memorable predictions from Harry Dent here on that show. That's 3 weeks from today. People put credibility in Harry's predictions because the depth of his research is so extensive. So a lot of great shows coming up here. I think I like how I put that earlier. With real estate investing and a turnkey model like we discuss here so much on the show, you get good returns over time and you get more control and less hassle inside a relatively passive investment. More control, less hassle. Okay, in the economics and financial world, there are a lot of things that we cannot control, and people, frankly, fret about them an awful lot. Like last week, it was reported that only 38,000 jobs were added in the U.S. in the previous month. That made the 10-year T-note plummet precipitously. We've got the Brexit vote coming up in the UK. We'll have to see if Britain remains in the EU. Why is gold the best performing asset class this year? The U.S. is in a presidential election year, so what's going to happen there? I mean, there are just so many things that we cannot control like that, all right? But with turnkey real estate, where you're a direct owner, you have more control with less hassle. And now some of those things that I just mentioned, they do affect real estate for sure. In fact, they all do, but each individual effect is largely negligible and, again, out of your control, okay? So whether or not Britain stays in the EU will not change the value of your Memphis turnkey property 10% this year, okay? That's my point. One thing, though, that you do have direct control over is your action. Yes, your action in purchasing property yourself. You cannot make any money from the property that you don't own. Because no one knows the future, then truly, just like Abraham Lincoln said, the best way to predict the future is to create it. Before we learn from today's guest, we have a question from GRE listener Mustafa Khan in Chicago that we'll play here, and then I'll answer. If you want to hear your voice on GRE, just go to GetRichEducation.com and click on the SpeakPipe app at the right, and it's very easy to record your message and send it to me just like this.
Hi, Keith. It's Mustafa Khan from Chicago. I had sent you a voicemail a while ago. Thank you so much for a detailed response. I appreciate it. I actually did attend that Chicago seminar last week, so that was very helpful. I'm trying to work through with that company to find a fourplex, so thank you for all the resources and everything that you do. I did have a question. For a long time, you've been talking about 1%, and, like the monthly rental should be 1% of the purchase price. I mean, that's sort of like a ballpark or a standard that you use. I really have a hard time explaining to others why they should look for something like that. I mean, before I started to listen to your show, I did buy this one rental property last year, and I was lucky enough this ended up fetching a little over than 1% per month for me. But I just wondering why 1%? What is the calculation that makes you say that that's a good number? Thank you once again, and I enjoy listening to your show literally every week.
Okay, Mustafa was referring to a webinar for Chicago Turnkey Real Estate. He got that webinar link by subscribing to our GRE newsletter. You can get those opportunities too by subscribing to that newsletter at GetRichEducation.com. Thanks for the question, Mustafa. The 1% rent-to-value ratio, and I guess one could really call that the rent-to-price ratio. That might be a little bit more accurate, but the rent-to-value ratio, the RV ratio, that's only a rule of thumb, okay? That is 1 month's rent income divided by the property purchase price. So with a projected $1,000 of monthly rent income, you wouldn't want to pay more than $100,000 for a property in order to maintain that 1% rent-to-value ratio, $1,000 divided by $100,000, and that's an indicator of positive cash flow. You might pay more than $100,000 for the property. It's just an it depends factor. The RV ratio is only a rule of thumb because you might get a little bit less than 1% and still get positive cash flow. It's just that 1% is a really easy number to process in your head when you're scanning across so many deals. Like if you're looking at deals from a great provider like Norada Real Estate or your chosen provider, or an owner-occupied fourplex that you're looking at or whatever. When you're looking at so many deals, it's just quick and easy to do that calculation in your head. And that proportion of those two numbers to each other has more to do with the property's profitability than any other metric, arguably, okay? So when you make something really simple like that, though, the RV ratio, when you make it so simple, well, then you also need to realize some limits due to the simplification. The RV ratio says nothing about the amount of property tax that is paid, for example, which is a significant expense. It also says nothing about your mortgage interest rate. But since mortgage interest rates have been, 5-ish% on 1 to 4 unit properties for years now, that 1% RV ratio is still a great, quick and dirty, topical number that you look at before taking your time, your most valuable asset, to look closer and determine the cash flow and do your due diligence on a property. Now, I say that 1% is a good number because with a 20% down payment on a property, where that leaves your debt service at 80% of the purchase price, that often provides positive cash flow. The rent-to-value ratio, it's really kind of an easier, more relatable metric than what I think of as the old GRM, the gross rent multiplier. In both of these metrics, really, the RV ratio and the GRM, they're both comparing the price of a real estate investment and its monthly rent income. That's it. It's quick and it's meaningful, but it doesn't give you the entire picture. Thanks for the question, Mustafa. Let's meet our guest. Today's guest is a remarkable investor. She owns investment properties around the world, including Washington State, Colorado, Arizona, Illinois, Puerto Rico, and France. She was recently based in Denver, but she just moved operations to Puerto Rico. And the most valuable thing she has received from investing is financial freedom. She's able to work as much or as little as she would like while spending time as a homemaker and a new mother. Welcome to Get Rich Education, Kira Golden.
Hi, Keith. I'm excited to be here. Thanks for having us.
Yeah, it's really great to have you. Now, you have such an interesting and I think clever way of going ahead and taking your, what I'll call a traditional buy and hold portfolio of where you directly invest in cash flowing real estate, and you use your vacation rentals, which cash flow as well, but you use those vacation rentals to go ahead and augment the cash flow that you get from your traditional buy and hold portfolio. Tell us a little bit about that.
Yeah, absolutely. Yeah, as you mentioned, I started out as a long-term buy and hold, and my mentality is definitely that of a long-term buy and hold investor. But also, the advantage of real estate is the ability to kind of build a lifestyle investment. And I like to travel, I like to vacation. So I also started buying vacation assets. And really, I think you heard the expression necessity is the mother of invention. And when the market turned down, a lot of my rental properties, my long-term buy and holds, didn't have the same stickiness or cash flow. Some of my long-term tenants were, looking to buy, so they were moving out. And I had to really figure out a way to keep my properties occupied and continue to meet my mortgage and other financial obligations. And so that's when we started doing this. We started leveraging access to our vacation properties to provide an incentive for tenants to, one, sign leases quickly, and two, pay on time and regularly, and three, really begin to sell sort of a lifestyle to our tenants as well, because when they're thinking about renting from us, they also have the option of taking advantage of spending time in one of our vacation assets. So it creates a true win-win for us. We can leverage days that normally we wouldn't maybe have rented on the vacation rental side, and we could share an experience of that lifestyle with our tenants.
Okay, so I guess how do you market that? How do you get the word out? Do you just have a Craigslist ad that says, you have a 3-bed, 2-bath rental here in whatever market in the United States where you're advertising your property, and then you put there that also gives that renter access to use your vacation rental portfolio while they rent from you?
Yeah, so there's an evolution over time, and it is different from situation to situation. But absolutely, in general, we are posting a Craigslist ad, whether it's for a single family rental, although over time we've been selling more and more of our single family portfolio off and focusing more and more on larger multifamily. But even if it is a single family, it'll be in the ad. It'll say $500 a month to come rent this place, and the option to use our vacation rental in Chamonix, France, or in Cabo Rojo, Puerto Rico. And you just have to meet certain qualifications. You have to pay your rent on or before the 1st. every month for at least a year. If you pay your rent on or before the first without demand every month for at least a year, you earn those days. And then they are subject to some restrictions. Christmas, New Year's, kind of those peak holiday seasons are blacked out, but otherwise, take your family and go on a vacation. So we put them on Craigslist. And then now, as we've been doing more larger multifamily, 300 unit, 500 unit apartment complexes, we're starting to work that in as well and use that for look and lease bonuses. If you come in and you look at the property, if you lease it right away. And we're also making some adjustments to the model where if maybe someone signs a 6-month lease, they get 3 days. If they sign a year lease, they get a whole week. So we're kind of playing with and continuing to evolve the approach over time as well.
Okay, so therefore, for example, if they'd sign a 6-month lease in your traditional buy and hold portfolio, they'd get a right, for example, to use a vacation rental for 1 week.
Exactly. Well, for 6 months, it'd be like half a week. And then for a year, it might be a full week. And they'll go down and we provide the space that we own. They have to still, do their airfare, all that. They have to get themselves down there, food and all that. It's not all inclusive, but we give them the access to the property for that time.
Yeah, that's really inventive. So what are more of the benefits of this? Are you able to charge higher rents? Are you able to get better quality tenants?
So higher rents is not the main objective. Generally, my goal is to price in the lost rent opportunity on the vacation rental. So, let's say I rent a place for just for simple math, let's say I rent a place for $1,200 for the week. I might try to, put in an extra $100 a month in rent to recoup that, right? But that's not so much the goal. The goal is more about creating low turnover, right? So having such a demand for my places that I don't have a lot of downtime on my units, which is an easily undervalued kind of experience of being a property manager. The difference between having a unit down for 1 day or 2 weeks has a real cost, but it's not often very tangible. But so we try to reduce that. And we also stickiness in terms of keeping a tenant for a longer time. So when a tenant goes to renew on a lease, picture if you've rented a place, you've paid your rent on time, you take a week, you go down to Puerto Rico, you come back, you renew your lease because you've now created this lifestyle you want to be a part of. You want to keep going every year. You want to keep going. You want to maybe 1 year to Puerto Rico, 1 year to Chamonix. And we're continuing to add maybe Sedona, Arizona, Whidbey Island, Washington. You want to continue to experience that lifestyle. So it's increase in stickiness with the existing tenant, increase in collections because people have to pay on time or before the first and in full, and a decrease in the turn time.
Okay, you're able to get better occupancy and I imagine a better quality tenant. I guess, how often do tenants actually take you up on this? I would imagine a lot of tenants coming in imagine, oh yeah, I can have a ski vacation in Chamonix, France if I go ahead and rent this multifamily apartment. But how often do they actually take you up on that?
Not as often as honestly I'd like to see. I'd welcome if every one of my tenants actually got to experience some of these awesome vacation assets that we have. But it's not that often that someone actually ends up either one, meeting all of the requirements, which is really simple and straightforward. We don't try to be tricky or anything, but paying your rent on time, on or before the first. Sometimes that can be hard for people. So, disqualifying happens. But even of those that do qualify, not nearly as many participate as I would have thought, when I first started doing the program.
We're talking about these vacation rentals. We're talking an awful lot about foreign property. And of course, you mentioned Sedona as one place. I mean, I imagine you can do the vacation rentals in the United States too, and maybe you have less regulatory things that you have to understand. But I would imagine if you had the vacation rentals in the US, you're probably going to have the tenant take you up on the offer more often than if they were going to go to a foreign country and one of your vacation rentals there.
Absolutely. Both those things are true. Like we have actually a friend of ours who does some investing with us, but also does some stuff on his own. He has some apartments in Denver and he has a family mountain house in Estes Park. So it's only about an hour away. So, that kind of a program, you're much more likely to have a tenant participate. I suspect you'd also be much more likely, though, to have a tenant who, because they'll be more active in participating, would also pay a little bit more of a premium because they know they're going to go. So I haven't actually experienced that, but I would suspect you'd be able to get a little bit more premium on the rents as well if you had a place closer.
So these vacation rentals, you're going ahead and renting those out to people, say, weekly, year round. And a lot of times those people will probably be outside of the tenants that you have in your buy and hold rental portfolio. And then with a certain amount of notice, you can just work in and rotate in those ones in your buy and hold rental portfolio into your vacation rental if they ever take you up on a deal.
Exactly. So, there's three users classes, so to speak. So, for example, our project in Puerto Rico, we have an investment group. I am not the only owner of that LLC and that asset. So, our group owns that. And so, there's some benefit there. Both the members of the group are able to use the property. So, they have that benefit. But they can also leverage the property as part of their personal rental portfolio and use this strategy with their other buy and hold properties. And so there's the owners of the property. That's one group that stays and uses and gets benefit out of the asset. Then there's the primary market, which are the vacation renters that we're marketing to. That's our primary kind of consumer market. And then there's the tenants on our buy and hold as well. And then from a standpoint of being, having integrity and making an offer that's valid and true, we always, rather than have a specific asset. So if you were a tenant that was moving into my property in Dayton, Ohio, you wouldn't be promised to go specifically to the asset in Puerto Rico. You would have access to choose at the time once you qualified from certain properties that are available. And the examples include the ones we currently have in our portfolio. Because we'd never want to end up in a situation where someone was promised, and picture this, you've got 300 tenants who've signed a lease that says you can go down to such and such property at such and such an address in Puerto Rico.
Right.
And now you want to sell such and such property at such and such an address in Puerto Rico, and you can't because you have a contract now, right? So we always keep it so that you're going to have a pool of assets that you could choose from. And here's some examples of ones we currently own. And that way the two pieces of the business don't sort of hamstring each other.
Got it. Okay. So that's one benefit of growing your portfolio and growing your vacation holdings. So you can offer a greater palette of services to that Dayton, Ohio renter or what have you. And now you can also offer them, you can ski here, you can surf here, you can hike here.
You got it. Exactly.
So I would imagine, I guess I'd want to know, how does the management and maintenance structure work on the vacation rentals? Most of our listeners, and me included, are more used to doing longer term rentals. So how does that structure look like for the shorter term rentals?
Yeah, so currently we have on-site management staff that works directly for Direct Source Wealth. So my company, Direct Source Wealth, and we have a direct employee, or we call them a site manager or project manager. And they have local contracted staff that does the cleaning and the turnover and, stocking, make sure that all the forks and knives, everything is all in the property, and fresh water bottles and all that kind of stuff. And then my staffed project manager does all of our marketing. In fact, she was just at a home away conference in Dallas. So she does the promotional piece. And then when there's an actual utilization, so when a tenant in Dayton, raises their hand and says, yeah, I qualify, on-site property management in Dayton, Ohio verifies that they meet the terms, that they paid their rent on time, on or before the 1st, and that they've been there the agreed upon amount of months. And then they basically make the connection with the project manager for the vacation asset. And then the vacation asset manager says, here's the availability over the next, 6 months, a year. Like, when are you thinking about coming out? Here's our availability. And they'll book the actual visit, and then they sort of take over from there, and they'll meet the tenant, make sure they have a good experience, and they're treated just like any other vacationer or property owner who would be going out and staying on the asset.
Yeah, that's a really fascinating way to do this. Do you think it's easy to quantify, I guess, how much it really increases the occupancy in your buy and hold portfolio when you do this? Or is it more of like an intangible, just a better quality of tenant that you're able to get? Or how much is it helping you?
Yeah, so I could quantify it very particularly when I was doing smaller properties. So when I had just a handful of single families or duplexes and fourplexes, I basically operated with near zero loss rate for occupancy, right? Because as soon as I would put a new property up with the vacation rental, I would have, I'm just kind of going back to the early tests. When I used to market, I might have 4 showings to go see a property. When I would market the same property with a vacation rental in the Craigslist ad, I'd have on average about 3 times the amount of just showings, right? So there's a quantifiable increase in just the number of people looking at my property, which naturally translates more people looking.
Right.
You have more people who are interested. And I've actually, even at the bottom of the market, I was in some bidding wars with tenants who wanted my property. So kind of like if you think about how banks do it, when they do an open house, we have an open house, come check out the property. I might have 15 people walk through, 3 or 4 submit an application, and then we'd have a conversation and say, well, this is what I listed the rent at, but so-and-so's offering to put a double deposit down and pay an extra $25 a month. What would you like to do? So that's sort of the best case quantifiable. As we've gotten bigger, as we've been doing more of these larger apartment complexes, quite frankly, it's just a lack of collecting the data to say exactly how much. I'm sure it could be quantified, but we just haven't really collected a lot of data to make a comparison, because I was so confident that it's working after I'd been doing it on the smaller units that I didn't really see a need to collect additional quantifiable data.
Yeah, it would make a lot of sense that you're just getting more impressions. You're just getting in front of more people, and that's going to increase your available renter pool.
Right. Well, and imagine you look at the Craigslist ad, you can close your eyes right now and you can visualize it, right? And you can see the ad that when you click on Craigslist and it shows the picture and you have a picture of like a nice looking living room or a pretty kitchen, well lit. Then you look at my ad and you've got a picture of the beach, right? and / a really nice looking kitchen and the living room. So everything's the same in the other ad plus. Now you've got this, or Chamonix, you've got the picture of Kris Kringle with the little horse and buggy, cutting through this old French provincial mountain town. It increases that emotional connection right off the bat.
Yeah, that's right. A tropical beach certainly gets your attention when you're looking for a 2-bedroom apartment in Dayton, Ohio.
You got it. Exactly. Especially when you're looking in November.
Right. Well, I think you're really helping solve a problem, Kira, because you know what? I talk to a lot of people, a lot of novice investors that say, hey, I want to go ahead and buy a vacation condo in this place, and I want to rent it out for 30 years, and then I want to go live there when I retire. Well, there's really a lot of problems with that scenario. One problem is it usually doesn't provide cash flow, but with the vacation rentals and the way that you're doing it, and you're leveraging it with short-term rentals, it might actually finally make financial sense, just might, for that prospective investor.
Yeah, it absolutely makes a difference. So we've talked primarily focusing on how does it help on your long-term buy and hold portfolio, but you're absolutely right. It helps the other direction as well on the vacation asset in a number of ways. And let me put some context here. When I talk about the place in Puerto Rico, that's 30 3-bedroom, 3-bath apartment units, right? So it's not like we went out and bought a vacation house and are trying to do this. There is an economy of scale that I believe is really helpful, if not critical, to being successful here. But even if you did a single unit, like we do have a single house in Sedona, we do have a single condo in France, it can still work. And the other side of this is that not only do you have useful days that you can then, as I said, remember, we take that economic week, that whatever it is, maybe it's worth $500, maybe it's worth $200, and we're actually able to increase the rents on the single family or the rent long-term apartment to cover that week that maybe otherwise wouldn't have been used. So we increase or optimize our occupancy in our vacation rentals, right? So it's feeding itself back that direction as well. Plus, the people who do go out have now created a connection with that place. And in the vacation rental business, it's all about building repeat business. The first 3 years, all you're really doing is getting exposure the first year. Whoever does happen to stumble upon you on Airbnb or VRBO or Expedia or wherever, Craigslist, wherever you've advertised, you're trying to give that person just an unbelievable experience so that they come back. Because that's the real way that the vacation rental assets work economically, is that repeat business that you can bake in. And so by having this huge pool of long-term buy and hold tenants that you're marketing to, that actually increases the number of people who may participate in your vacation rental asset on an ongoing basis.
Our guest today is Kira Golden. I'm your host, Keith Weinhold. We're going to talk more about the property ownership structure when we come back. This is Get Rich Education. Cash flow real estate investors nationwide and worldwide, this is Get Rich Education's Keith Weinhold. Forbes has rated Memphis, Tennessee as the #1 cash flowing market in the world. Our good friends at Mid-South Homebuyers have been Memphis's premier turnkey real estate provider for 14 years with a stellar reputation and an A+ rating with the Better Business Bureau. Owner Terry Kerr was born and raised in Memphis. Yeah, he knows the market. and has renovated and sold over 1,000 houses in the Memphis area. Find out what their many repeat buyers already know. Their houses are completely renovated, even come with a 1-year builder's warranty and a lifelong rental guarantee. They're a perfect fit for the first-time out-of-state investor or the seasoned investor diversifying their portfolio. Mid-South Homebuyers' friendly staff makes investing easy. Learn more at midsouthhomebuyers.com or give them a call at 901-217-HOME.
Are you looking for a roadmap to financial freedom? If so, we have a solution for you. Norada Real Estate is offering a limited number of free strategy sessions to help you get out of the rat race. Learn how you can create wealth and build monthly passive income. To set up a time with one of our knowledgeable investment counselors, simply go to noradarealestate.com. That's NORADA realestate.com.
We're Rich Dad Advisors, Josh and Lisa Lannon.
Be who you are becoming. Listen to Get Rich Education with Keith Weinhold.
Welcome back to Get Rich Education with our guest, Kira Golden from Direct Source Wealth. So, Kira, oftentimes with foreign property ownership, there's more to understand than there is with domestic property ownership. There's Napoleonic law versus British common law, and there's some jurisdictions and nations where you don't really have direct ownership of property. So, what do you do to work through that?
Yeah, that's a great question. And I'm going to give a partial answer, which is I don't know exactly what you do to work through it everywhere. I have personally chosen to stay focused in areas like Europe, where you've got, longstanding property right laws. I like Puerto Rico because you have it's sort of international, but as a territory of the US, there's, we
Right.
close through Stuart title, we get a deed. I understand how all that works. So, I've avoided personally, although many investors haven't, certain areas in South America where it is a little more difficult for me to understand property rights. In fact, my sister and her husband think they own a place in Costa Rica. It's been about 15 years now, and they're not 100% sure. Sometimes they do, sometimes they don't. Sometimes they can build on it, sometimes they can't. So I've seen the pain that can be. And so I would say, not to opt out here too much on that question, but get proper legal counsel, invest in proper legal counsel and advice. And then also the big thing I would say is be there. We moved to Puerto Rico before we did our project in Puerto Rico. We stayed there for 6 months until it was stabilized and occupied. Now, there's other reasons that we have chosen to base ourselves in Puerto Rico, tax incentives and other things, which is another whole show. But, we actually went there. Same thing with France. I went for many summers before I invested there, and I lived there for a year. So I would say it's great. And there's a lot of opportunity to invest internationally, but you do want to either yourself go and be there or invest with someone you have a real trust and understanding of who they are and how they do business. Because I think there is more risk of being taken advantage of or, having things not go right, or even a well-intentioned person really screwing up when you go international. It is a little harder, but it's well worth it.
Yeah, and I would imagine a lot of this just comes down to basic communication. Like, do you insist on having an interpreter for your contracts?
Yes, so we get all of our contracts translated into English, and I get them translated both by quote unquote the opposing party, and I also have my own person translate.
Ah,
So I want to see not only what does it say, but what is the spirit in which they translated the document. There are times where you make a determination about what a word means. How much did you stay within the spirit of what it was supposed to mean, and how much did you maybe manipulate that? Because if I see any signs that somebody's giving me half-hearted translations, I'll turn and cut bait. I don't want to work with that person. So the process of doing the translation is just as important as what the documents actually say. And then I also really don't let on that I know what they're saying. So I understand a fair bit of Spanish. I speak French fairly fluently, maybe not as well now as I did 5, 6 years ago. I haven't used it daily, but I can understand most of what's happening. I don't play that up. I let everybody kind of speak in their own language and say what they need to say, and I just kind of listen. And, being quiet and listening is probably the most important skill I think I've had as an investor because a lot gets revealed if you can just be quiet and sort of listen.
Yeah, the strength of your team always matters in real estate investing, and I would imagine that that is even more true in this case.
Yes, absolutely.
So, I guess, are there any jurisdictions that you look to maybe avoid where maybe they're cracking down on weekly rentals, and some municipalities don't want short-term rentals and Airbnb type of activity because that competes with hotels, and sometimes hotel lobbies are more powerful in certain municipalities and so on. So, what do you do to work through that?
Yeah, I mean, that's a realistically and internationally. And I'd say, obviously, there's the stay on top of what's happening, be an active investor, engage politically, give feedback. I mean, Arizona just passed a law that actually prohibits Sedona from blocking vacation rentals. So I had been operating my property as a long term buy and hold since 2010 because I couldn't legally do that in Sedona. And the legislature's made a change. And I'm not going to say by any stretch was I instrumental in making that happen, but I was active in reaching out to the legislators who were doing that and giving them encouragement and feedback and support that there really is a market of people who value that. And I published it on Facebook and I, really tried to be engaged. So that's one step. And then step two is just comes back to good, sound business practices. Never underwrite an asset for one single purpose. You got to have a plan A, a plan B, a plan C. And while vacation rentals can be very profitable, you also want to underwrite that asset so that if you have to just throw a long-term tenant in there, they can still cash flow. And that gets to your point you made earlier about a lot of people think, oh, I'm going to buy a place and I'm going to let the tenants pay it off and I'm going to retire there in 20 years. But if it doesn't cash flow as a long-term buy and hold and cash flow even more as a vacation rental, I personally wouldn't do it.
That is such a smart thing to say. So, if the short-term vacation possibility goes away, you're not sunk.
Right. It's the same thing if you're thinking about doing a fix and flip. You think you want to do a fix and flip, but just in case it's a flip that flops, could you put a tenant in there and keep it? Right? Because otherwise, don't do the deal.
Yep, that's a smart thing to say, and most people just aren't thinking that way. And really, kind of all this, Kira, plays into, I guess, just this overall theme of diversification, diversification of use type, and then diversification geographically, too. What you're doing as you build your portfolio is you're diversifying and you're hedging yourself against currency risk and against political risk and all sorts of factors.
Yeah. So, Keith, that's a great question because I'd worked in the financial terms of traditional financial advisory space, and they really harp on diversification. And I am a believer in diversification, but just not at the cost of actually making money. You can't diversify into something to be diversified and lose money.
Right.
I've focused on diversifying within real estate because as the market moves, different asset classes do better than others. So sometimes we fix and flip, sometimes it's buy and hold apartments, sometimes it's vacation rentals. And then we also diversify geographically. So we're invested in multiple states and multiple countries to hedge currencies, to hedge political risk. That diversification is critical. Having said that, it's not always easy for a smaller individual investor to be fully diversified. I was coming up against that, and I have a fairly decent sized portfolio. And that's actually why we created Direct Source Wealth, was that it's an opportunity to co-invest with other investors. In other words, what drives me to create Direct Source Wealth wasn't that I wanted to make money in fees in managing other people's investments. I had my own money I needed to invest. I wanted to be diversified, and I needed other investors to be able to reach the economy of scale to really be able to diversify correctly. So we co-invest on all these different assets. So everything I talk about, the project in Dayton, Ohio, the project in Puerto Rico, some of them I own personally and on my own, but not many. Most of them I would rather own, for example, half of a house and half of a vacation asset with another investor who owns the other half of the house and the other half of the vacation asset so that we can have that diversification of geography and asset class. And so that's the approach we've taken through Direct Source Wealth.
Yeah, it sounds like your approach really grew, I guess, organically is the word to use to go ahead and fit your own needs for diversification and otherwise. So now, I imagine that this might intimidate some. They think about the upside of diversification, but they think of maybe the downside of dealing with foreign government policies and property ownership rights and contracts and currencies and all that. But you have a way to help others get started.
Yeah, absolutely. So One, and in an easy way, is to co-invest with us because we've already spent the time and money building the staff necessary to oversee, assets in various places and have project managers who specialize in a particular asset class. And you mentioned earlier having that team. We've already spent the time and money to do that. And it does require a certain economy of scale. If you're going to start out as an individual single investor, it's not so easy to own 30 vacation units in Puerto Rico and 300 units in Dayton, Ohio. So that's one option. The other option, though, is I'm always happy to just talk with investors through their own situation. Either myself or one of our real estate consultants on our team can brainstorm. We believe strongly in transparency and respecting individual approaches. So, one thing people will never get is, invest with us and that's the only solution. We're happy to also say, yeah, like I shared before, the guy who owns some apartments in Denver and a place in Estes Park, we helped him brainstorm through that strategy and then, kind of connected him with our attorneys and the people we use so he could do it on his own because he wanted to be hands-on. He wanted to manage it. Other people don't want to be as hands-on. They want to be more like a CFO and just kind of get an update, get a report, know what's going on. And for those people, they can just co-invest right alongside us and put their money into the deals we're doing.
What kind of qualifications does the investor need to get into your deals? Do they need to be accredited?
Yeah, unfortunately, securities law is moving in the right direction, but it's still very, I would say, elitist. In most deals, our investors have to be accredited. There are the occasional deal where an investor's not part of a pool and they're buying something just on their own and they're just buying real estate. And so there are some opportunities for non-accredited investors. And we're working on putting a fund together so that investors who aren't accredited can start out in the fund and then kind of progress into direct ownership. But as of right now, they do need to meet either a qualified or accredited investor standard. And surprisingly, actually, a lot of people either think they wouldn't be or don't know that they are qualified.
Yeah.
So I would always tell people, don't let these terms scare you. Just call us. And it's never a waste of our time. We're happy to talk through it with you. I wasn't always accredited. I had to start somewhere. So do most investors. And at least if you know what the requirements are and you can kind of work towards them, we have plenty of people who talk with us regularly. They're not accredited yet, but we're going to help them get there. They're going to have to get there on their own, but we'll encourage them and share our resources that we've built to help them get there. And then when they're ready, they can come co-invest with us. So we're always happy to have that initial conversation.
Yeah, that's great. Well, Kira, this is such a clever think outside the box technique to use short-term vacation rentals to go ahead and augment and increase your occupancy and your cash flow on your buy and holds. Go ahead and give out your website, Kira.
Yeah, so our website is Direct Source Wealth. That's Direct Source, SOURCE wealth.com. And you can also find us. We're on Facebook. We got a Direct Source Wealth Facebook page and LinkedIn. So pretty easy to connect with us. Or you could call us at 1-888-SOURCE-4. So that's 888-SOURCE-4.
Well, Kira Golden, it's a fascinating concept. Thank you so much for coming on to Get Rich Education.
Thanks for having me.
By the time that Kira Golden was 18, she already had holdings in real estate and the stock market. Less than a decade later, she was able to leave her position as a financial advisor for Edward Jones and live off her investment income. Kira has experience investing in real estate, equities, venture funding, and other places too. In her first 2 years with Direct Source Wealth, she grew annual investments from $7 million to $60 million and managed operations for over 50 multifamily buildings. She's a magna cum laude graduate of the George Washington University, earning her master's in public administration. So she's basically got both real-world investing experience and an academic foundation. Now, Kira speaks on wealth strategies for those seeking to be financially free. And of particular interest for her now is syndicating the financing for promising startup ventures through crowdfunding campaigns. So quite an accomplished guest today with a creative real estate investing technique that I just loved. She travels the world to both advise on investing and seek out her own profit opportunities. And credit to Get Rich Education's developer here, John Collins, in, I'll say, discovering Kira and letting me know about her. I just love bringing you ways like this to build your wealth that you had not thought about previously. Today, Kira Golden gave us those great ideas to enhance the income on our existing rentals. You can try to do that yourself, or you can look her up for help. Her contact information is also in the show notes, like it always is for our guests, okay? So although enticing more prospective renters to your domestic buy and hold real estate portfolio by offering them access to vacation rentals, all right? So by doing that, you might or might not be able to charge more for rent income, but you can get a greater cash flow without raising the rent, okay? You can get greater cash flow without raising the rent because you get greater occupancy and you attract a better tenant, and that better tenant might mean less wear and tear on the property, and that's how you've increased cash flow without necessarily getting greater rent income. If you want to see headshots of, Kira Golden and all the Get Rich Education guests, you can do that at getricheducation.com. I mean, don't you ever wonder and want to know what some of these guests look like that you're hearing from? So now, diversifying internationally, it can make a lot of sense. I mean, you might already have most of your real assets in the United States or wherever country you live in, but do you really want every one of your assets, like 100% of your real assets, to be in the United States, okay? 100% in the greatest debtor nation in the history of the world. Here's another alternative for you. What if you had a trusted team internationally that made outside U.S. investing turnkey, managed, and easy for you, and it was an agricultural investment, so you're diversified two ways at the same time, outside the U.S. and in a different use type, agricultural rather than residential, all right? And you don't need to be accredited. And until the end of this month, you can get in for as little as $13,000 per half-acre Panama coffee farm parcel. That's just through the end of this month if you're a GRE listener. And you know what else you're doing when you invest here with International Coffee Farms in Panama is that you're actually investing alongside me. I was an early investor in the Panama coffee farm parcels, and I'm glad that I have been. I can't officially endorse it, but I think my participation myself probably tells you a lot about what I think about it. I visited the farms in Panama myself this past winter, and the crops are developing ahead of schedule. And of course, the investment produces cash flow from the annual coffee harvest. If that sounds interesting to you and you want to learn more, just send an email with your contact info to coffee@getricheducation.com. That's coffee@getricheducation.com. Thanks to our guest, Kira Golden, today. Until next week, though you might soon quit your day job, don't quit your daydream.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.